Good afternoon, everyone. I want to make a quick video on a subject that I don't think I've ever covered, at least not from this angle. And if I was to give it a clickbait title, it would be Why You Should Take Trades That You Know Are Going to Lose. Um, and just poking a little bit of fun at the idea that we think we know what's going to happen. And when I give these examples, I'm going to give examples where I made the wrong decision and times where I've made the right decision, quote unquote. But the focus of this is actually eliminating the personal decision. And that's something I think every trader struggles with is sort of, objective trade setups that you take regardless of how you feel about them. And, I was thinking about how it could be confusing to a newer trader if say I think we're going to see lower, but I'm going to take the long anyways. And so that's what I'm going to explain. So we're going to talk about swing failure setups, sweeps of range highs and range lows. And the thing about these setups is they're so good. They offer such great risk reward by their nature. It is very hard to justify not taking them. So let's talk about a couple that if you've been here for a while, we did take, or if you have a good memory. So you have these wicks with these really tight invalidations sweeping these highs. You might have other confluences as well. But, you can trade these into 5, 4, 6, in the middle of the range, 5, 6R trades. We also, for example, took this swing failure long, waiting for that little wick under the low. Really nice trade. Actually compounded along here, but that's neither here nor there. But these can be 15, 16, 17, 18, 19, 20R trades. A very extreme example would be, where the heck am I? Oh yeah, this long, sweeping this low. That was a 30R trade or something like that, into taking these highs. 20R, 30R, depending how you trade it. So we can see these, we took this short, very great risk reward. Because of that, it is very hard to justify not taking any swing failure. And so let's talk about some that I didn't take. I did not short this wick, this sweep of this high initially. I was waiting for higher. I did short this one, but I didn't short this one. How much did that decision cost me? Let's just say, we consolidated there for a bit. We came under. Everybody say, I'm just going to take it. I'm going to just take the swing failure short. I don't think it's going to work. But it covers if it does work, and say I trade it to the golden pocket region, it pays for 11 or 12 losing trades. So I need to be right about not taking this swing failure 12 times in a row for it to actually be a positive, EV positive decision. That's very hard to do. So whatever edge you can feel like you're trying to express on the market by saying, I'm going to fade this one. Well, you better have a very strong edge in the case of a swing failure, because these are not 1R trades, 1.5R trades. These are 10, 11, 15, 20R trades. And so to not take them, you need to be like 10 to 1, 20 to 1 certain that you shouldn't take it, rather than just putting on the risk, taking the exposure, and it either works or it doesn't. So this trade, not taking it, cost me, probably 10, 11R. Yes, I got this short, but that doesn't negate the fact that I could have taken this. And my idea was that we do push up higher. I wanted to see some things that I wasn't seeing, and price just dumped. And in hindsight, I could just say, well, here's the trigger. We swept it, just take it, right? So my only point isn't here that you just need to take every random position, but if you have the valid trigger, even if you know you're going to lose, oftentimes you're better off just to take it, because the risk reward is so good that even if you're wrong or right half the time, it's still going to probably pay you off more just taking all those losers instead of trying to be selective. This was another one I didn't take. No, I was looking for these highs to be taken. This looked really good to me. I don't know. This is tough, but a major high swept. We reject. Kind of a retest here. The risk reward is just so good. Why not just take it? I also knew that I was likely to find a short anyways if we had a bigger rejection, but doesn't negate the fact that had I taken that and compounded it. And so, it's a lot of these swing failures we did take. I mean, some of these shorts were swing failures, right? I mean, this long was a swing failure of this daily pivot low. This short, minor swing failures. But the point is, when I'm taking this long, even though I don't like it, and I think, I think lower is likely, I have to, in order for me to justify over and over and over again, to not trade the wick swing failure of a major range low, even if I took every single one of these, I think I took like a 0.2% swing failure scalp on this, on like the 1 minute chart. I think I took that on a live stream actually, but I closed a lot of it early as a scalp because I thought lower, and I held a little bit as a swing. Obviously, I wish I had a bigger position. But let's just say I traded every single swing failure here as a swing and didn't take any profits. So, we get this one, and actually, I don't even know if this would have stopped me out, but let's just, oh yeah, it would have. So I get stopped out. I trade, maybe I even trade it like this again. I get stopped out. I mean, technically, maybe you could have even traded it like that. I get stopped out, and then I trade another one and get stopped out. Even if I lose 3 of those in a row, just taking another one that I think is going to lose, like this one, and it working, pays for that times 2. It pays for all those losing trades and 3 more losing trades. So anyways, that's my point, is with these really high risk reward setups, and swing failures are typically the higher ones, right? Because how many of our major, like wick low, wick high, wick low, how many of those come in as a swing failure? Most, right? Most of them. So you're very likely to get into a nice low risk, high reward setup. Now, of course, this doesn't apply if you're not using risk management and you can only afford to lose 2 trades, in which case you're destined to be destroyed anyways. And this probably isn't the best place for you if that is how you intend to trade. But this is if you're using risk management, betting a reasonable amount of money, betting $1 to win 5, betting $1 to win 8, betting $1 to win 10. Of course, $1 just represents risk reward, whether that's risking $1,000, $10,000, $5,000, $100, $20, doesn't matter. You get the idea. So there's a great case to be made for if you have a valid setup, even if it's not a perfect setup, for something like this that's very high risk, high reward, or low risk, high reward, great RR, high RR is what I was trying to say, that you just take it. And you eat the stop loss, and even if your heart of hearts tells you, I don't think this one's going to work, you just take it anyways, because your heart needs to be right 6, 7, 8 times out of 10 or more to make it a worthwhile call.